Good morning, everyone, and welcome to Windsor Brokers Live Daily Market Outlook. Today is Friday, 20th of July, 2012. The top performer of past 24 hours is definitely crude oil that is heading strongly higher, with the September contract currently trading at 90 to 80 level. The oil remains supported and surged after 20% in the past couple of weeks. Prompted some selling as worries about conflict in Middle East is increasing. The 8-week high was seen during the yesterday's session, with gaining for another 7 straight days, fueled basically by escalating tension in the Middle East, and of course there's disruption in the output in the North Sea. The asset crude oil hit so far 90 to 80, and we're going to take a more look in our technical part, where we will see the levels that are seen expected. From Eurozone, Spain remains the main driver, as increasing fears about current Spanish crisis, with the 10-year bond yields again raising above 7%, despite yesterday's approval by German Bundestag of the fresh austerity plan that basically brought the people in Spain in the streets again in the heavy protests. It seems that same scenario from Greece is now repeating in Spain, and just a matter of question which country will be next. It's also significant yesterday's comment of Angela Merkel, the German Chancellor. Some analysts said that that first time she said the pure truth, saying that basically still no steps and no decisions have been made in order to tackle the crisis in a proper manner and avoid further catastrophic results that might come in case of domino effect that is basically already underway, as the Greece was hit first. Now the crisis spread on Spain, and most likely the next candidate for this will be Italy, whose debt is approximately 1,900 billion euros. From today's calendar, we are not going to be too long with this part. From today's calendar, not many indicators are due today. However, import prices for second quarter from Australia already released show strong increase compared to previous release of first quarter. That was minus 1.2%, with today's consensus at 1.6% and release at 2.4%. German PPI came at 0.4% on a monthly basis, compared to minus 0.2% forecast and minus 0.3% in the May's June. I do apologize, you cannot see the results in our site on your screen, as there is a slight technical problem that doesn't allow us, and our technicians are working on this. So within a few minutes, I hope we will have problem solved, and they will show at least those that are already released from Germany PPI data. Public sector net borrowing from UK comes at 8:30 GMT, decrease compared to previous release of May at 15.6 billion pounds is seen, as the net borrowing is expected to drop to 11.8 billion British pounds. Across the ocean, only Canada is active today. CPI due at monthly CPI for June due at 12:30 GMT, a minus 0.2% drop from minus 0.1% seen for today compared to May's release, while core CPI is expected to go by minus 1% compared to 0.2% of May's release. And that was all for Friday. I guess we should have some break from economic indicators, as usually Thursday. Yesterday's day was full, and we deserve some relax today. Let's now take a look in the markets and see the latest movements in the major currencies and commodities. We're going to start with our top performer, crude oil, that remains in steady and very strong rally of recent double bottom at 75 pardon, 77.27 and 77.57, where the good support was found, and but basically the oil price found a ground for now, as it retraced so far over 50% of the initial down move from 106.41 down to 77.57 past two and a half months rally. The latest, the highest level seen so far is at 93.22, as the pair is currently in the third wave of its low at 77.27, with the rally of the third wave expected to stretch approximately towards a 95 zone, according to the equivalent of the first wave that moved from 77.27 to 88.97, with the break above our initial resistance at 92 zone, and clearance before this of 50% retracement, now facing the dynamic barrier at 94 level. That is psychological round figure resistance, and the 90 days moving average, with the next level seen at 95.00 and then 95.28, 61.8% retracement. Studies on the daily chart are in the positive territory, and they see potential for further extension higher, with the I would say key dynamic barrier seen at 96.71, currently 200 days moving average. In case of extension of this rally that so far looks good, and the mounting tensions in the Middle East that are threatening for a further escalation, along with the requests of and wishes basically of OPEC members to see crude oil in the short term approximately at $120 seen as ideal price for OPEC. Most likely scenario would be a retest of break above 200 days moving average, and retest of a very strong psychological barrier at $100. According to the current structure from technicals and also from news and fundamentals, this would be quite a likely scenario in the short term. A quick look at the near term action. The studies on the 1 hour chart are now pointing lower on the slight corrective mode after hitting a fresh high at 93.22 in the late hours of yesterday. The RSI emerged down from the overbought territory, with the MACD on the hourly chart pointing lower, as well as momentum seeing scope for some corrective action, but currently so strong bullish tone that dominates and drives the pair higher. Doesn't see any stronger corrective movement so far. Immediate Fibonacci support at 89.46, 23.6% ahead of a more significant static one at 89 level, previous peak of 5th of July, and 87 zone that should not be exceeded in case of any deeper reversal. In between, we have 55 days ascending 55 days moving average currently at 88.38, and ideal reversal should be seen around 89, 88 zone to resume the current rally and open previously mentioned upside levels. Now we're going to take a quick look at Euro to see the latest movements. The Euro lost some of its strength. However, based on a technical view, the succession of higher lows of recent double bottom at 121.60 zone still keeps the upside available, and keep hopes of possible further stretch higher, despite the upside being now firmly capped at initially at 123.00, and the more significant barrier is seen at 123 at 2030 zone, where we have yesterday's peak and the high of 10th of July at 123.33, and basically break above this level that is currently limited by 55 days exponential moving average that basically keeps the upside limited in past 3-4 days, as seen as the main barrier required to be cleared in order to resume this short-term corrective action, as the pair remains in the firm downtrend. of the latest lower top at 126.91 that so far dipped to 121.61, just ahead of our initial downside target at 121.50, break of which to open a more significant psychological level at 120.00. As larger picture outlook maintains still a firm bearish tone, we still favor the downside on the longer run and see potential for further extension lower, especially that along with the technicals, the fundamentals and the news that are coming from Europe, and this is what we just mentioned about Spain, are not promising anything that could bring some significant support and push the pair out of dangerous zone. Brief look again at the near term, rather sideways movement seen in the past couple of hours during the overnight session, with the downside being limited at 122.28. That is yesterday's low, and the bull trend line drawn of 121.61, while upside the initial barrier at 123.00 so far caps the upside ahead of already mentioned the 123.2030 breakpoint zone, above which is set to resume the short-term recovery and open way higher. Loss of 122.25 trendline support in yesterday's low would weaken the near-term structure, with the break below 122 as round figure support to turn the focus completely lower and look for a test of interim supports 121.88, 121.74, pardon, 122. I do apologize. 121.88, 121.74, and finally 121.61.50 zone. That will open way for further extension higher. 4-hour chart studies are also in the sideways, but still slightly skewed towards the downside, as long as at least initial barrier at 123 stays intact, with more risk in the near term seen towards the downside and possible extension towards our key supports 122.25, yesterday's low, and the trendline support. The British pound remains in the strong uptrend after yesterday's break above our upside targets and the barriers at 157 and the 157.21 low high of 2nd of July, so far stretched to 157.36. And just ahead of our key dynamic barrier 157.50. It's a 200 days moving average, and the static resistance at 157.76, 20th of June high. Corrective action seen on the overbought hourly studies is now underway, with the previous high at 156.77 offering initial support ahead of, along with the 55 days exponential moving average, with this first Fibonacci support seen at 156.55 and reinforced by ascending 20 days moving average. Ideally, any stronger reversal should reverse at or above 156 level, that is reinforced by ascending 55 days exponential moving average and the 38.2% Fibonacci retracement of rally from 153.92 to 157.36. Slightly toppish studies on the 4-hour chart might be signal of possible stronger easing, with the loss of 156.00 seen as risky for near-term structure that might delay bulls and allow for a stronger reversal. Daily studies are about to break higher from their midlines, as MACD is currently attempting. Basically, the trigger will be break above 157.50 and 157.75 resistance zone. Basically, the 200 days moving average keeps the upside protected from 22nd of May, when the pair's price broke lower, and so far being firmly capped, except one spike on the 20th of June that hit 157.76, but price action quickly moved lower. So basically we are looking for a test of this key barrier and the trigger at 157.50 and 157.75, with a more positive outlook. The upside seen favored at this point Only loss of 156, as I said, would weaken the short-term structure. The dollar-yen's near-term price action remains turned towards the downside, maintaining the negative sentiment following upside rejection at 80.00 zone seen at the beginning of July, with steady extension lower through 79.00 range floor and the 200 days moving average that was taken out on 16th of July. So far dipping to 78.42. That was the low of yesterday, after breaking below the previous low at 78.67, as the pair also took out 78.60, our initial downside target. Focus is now firmly turned towards the downside, as brief recovery attempt did not show much results, as reversal occurred at 78.79 on the upside during the early hours of today, during the Asian session, being capped by descending 55 days exponential moving average, and still short of 79.00 as our initial barrier, reinforced by 200 days moving average now acting as resistance, as focus still stays towards the downside, with the 1 and 4 hour studies holding in the negative territory. A likely scenario would be further extension towards our next downside target at 78.00, and possible extension towards the key support of the short term at 77.65, 1st of June low, as seen on a break. As mentioned on the upside, 78.80, the overnight's high, and more significant 79.15 are expected to keep the upside limited, and only break above 79.15 would provide near-term relief and prevent pair from the further extension lower. However, we need to see the clear break above 79.30-50 zone in order to confirm base at 78.42 and allow for a stronger recovery. That is quite unlikely to happen at present, according to the current negative technicals that are still seeing a downside favored, and see for it, looking for test of 78.42 and then 78.00 and the 78.00 and 77.65. And finally, the Swiss from the majors. Basically, the pair is looking for a basing at 97.50 zone, as the 55 days moving average so far contains the downside in past couple of days, as a part of corrective reversal from 98 to 71 peak of 13th of July. Studies the outlook on the 1 hour chart shows the pair price action currently in the sideways mode, entrenched within 97.45 and 98.20 range, and still lacking the more clear direction. On the upside, slightly positive tone seen on the 1 hour chart. Study still sees potential of possible attack towards 98.00 and 98.20-30 zone, break of which is basically required to ease to avert immediate downside risk and look for further extension higher towards next barriers at 98.50, 98.62, and finally the key barrier and the break point at 98.71. The 4 hour chart studies are flat, slightly in the negative territory, still keeping the downside vulnerable as long as 98.00 20-30 zone stays intact. A potential break below initial dynamic support at 97.68 and 98.45-50 higher platform would risk extension towards Fibonacci support 38.2% at 97.14, and 97.00 is around figure support, while more risk would be seen on a break through 96.67 peak of 28th of June, also close to 50% retracement of rally from 94.61 to 98.71. As said, current tone is rather neutral on the lower time frames and requires a break above 98.00, 98.20.30 on the upside, or a loss of 97.50.45 in order on the downside, in order to define the fresh direction. A larger picture, however, is still holding firm bullish tone, as the rally, the uptrend from end of February 2012 from 89.29 remains firmly in play, with the pair hitting so far 98.71, and upside target seen at 90 on the break above 98.71, seeing 99.00 as round figure resistance, and 99.49, 61.8% Fibonacci retracement of the larger down move from 117.30 to 70.67 historical low of dollar Swiss, as well as the parity level and 10050 200 days moving average seen on the weekly chart. That would be all for today. I would like you, if you have any questions now, to send them so we can start our questions and answers session. Okay, again, we have Aussie dollar. Let's just take a quick look. Daily structure remains firmly bullish after the pair broke above 200 days moving average at 102.78 and declared the previous peak at 103.26, extending through 103.68, Fibonacci 61.8%, 104 figure resistance, so far hitting 104.43. The corrective easing seen on the overextended hourly studies has so far reached 103.95. So 104 as initial support hasn't been clearly broken, with the slight reversal attempt of reversal seen so far, as the hourly studies are still at or just above their midlines, and RSI has started to point higher. It looks like this could be the end of the corrective action. That was quite mild, only 40 points. However, further supports seen at 103.77, where it's ascending at the 55 days moving average, and the Fibonacci levels at 103.62, 23.6, ahead of static support at 103.26 previous high. Close to which is 38.2% Fibonacci retracement, and basically reversal above these levels would be seen ideal in case of further extension lower. Still quite extended structure, quite extended conditions seen on the 4-hour chart studies, yet not firmly pointing lower. Seeing potential of further extension higher. As said, break above 104.43 on the previous high to open 104.73, peak of 27th of April, and 105.00 around the figure resistance. Okay, no questions, but we have a comment from one of our attendees saying just thank you, and commenting that he likes following analysis on a daily basis, and finds it quite good. Thank you from our side. We like to hear the positive feedback, as that means that our clients and visitors are happy and satisfied with our services. Of course, your feedback is always very welcome, as this will lead us for further improvements of our services. Since there is no more questions, I would like to thank you all for being with us today, as this is the last day of the week, and we are going towards a well-deserved weekend ahead of a fresh week that will bring us back into the business. I wish you all a very nice day today, successful and profitable trading, and of course a nice and relaxing weekend, and hope to see you back on Monday. That will be, what is today, 20th, so the Monday 23rd of July, when we are going to be back at our regular time at 7:00 GMT. Until then, nice time and good luck.